Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to like and refer this channel to your network, show that YouTube pushes to a high level of audience. I don't usually upload video anyhow. It means for me to upload a video, going to create a content, I must have discovered a problem to be solved. And right now, people have been trading breakout in the wrong way. People, traders, those that are actually losing money because of improper knowledge. They have been trading breakout the wrong way, and most traders actually like to trade breakouts because that breakout shows that the market is ready to move in a given direction. But in most cases, about 80 to 95% of time, most breakouts turn around to become fake out. So depending on how you want to enter this breakout, you are going to be faced with this fake out problem, and the reason behind this content is to solve these fake out problems. Okay, so the topic is how to trade breakouts in Forex synthetic market. So I'm gonna read this document and I'm going to practically explain everything here. But the truth is, this is not a financial advice. None of the free videos in my channel is financial advice. And what it is you have to diligently, proactively subscribe to our VIP channels for you to go far, and you have to become our mentee. That means you have to enroll for our mentorships for you to really go far. There are things that are not said in the public channel, there are things that are not said in the free videos, and for you to have access to them, you need to be discipled. Okay, so either you enroll for the courses or mentorship, which is long-term courses, short-term, or you subscribe to our VIP signals monthly, yearly, or lifetime, depending on your capacity or what you can afford. Right now, I'm gonna go deep into this stuff. Trend characteristics. These are the things you need to learn. Trend characteristics: pre-zero differential to breakable level of interest, breakable level continuity test, number of past breakouts. Breakouts is equals to trends plus measure pre-zero differentials plus continuity test near breakable level of interest. So this thing is very, very complicated to understand, but I'm going to break it down. Okay, you don't actually look at how the market behave. Okay, so we have a market that have a trend characteristics TS inside this block, and then this block represents trends in the market. Okay, so this block represents the trend characteristics in the market. Okay, TS, and then when this trend dies off, it creates some output, but this output does not last, and the market range. Why it is ranging? It cannot go beyond certain price level range, and that is zero differential. So this, because the market is trending up here, this up means it is going up, right? So it creates an output after certain trend and then range. Now within this range state, it cannot be able to break, the range. During the range, there are directions of the price movement which is against the trend. That is correction, right? So when the correction cannot continue going against the trend and stops, it reaches a critical level called zero differential, and this is called pre-zero differential. Now the aim is to break out of this range. Okay, we are not waiting for price to break out of this range, or maybe pull back a little bit and then continue. No, that's not how to trade a breakout. you rather deploy line frequency domain analysis to actually trade a breakout. In other words, you are going to trade a breakout before it happens and not when it happens. You are not trading a breakout when it happens or after it happens. Trading a breakout when it happens will lead to massive losses. Trading a breakout before it after it happens will lead to also massive losses in the long term. But trading a breakout before before is the best thing. So you have to trade breakout before it happens, meaning that you have to forecast the breakout and deploy high level live frequency tests to know if the breakout at breakable levels are continuous, meaning that this is a range. So this is our breakable level BL. Okay, so we have to enter this market within this zero differential, and then we monitor the output characteristics of the price movement near the breakable level. If the output succeeded to break out of this breakable level BL, you are going to trail your SL below the just below the breakable level in the case of uptrend, and above the breakable level in the case of downtrend. And then you are going to hold this trade and monitor the breakout until the breakout started creating outputs that are against its direction. Okay, that is when you are going to either take your profit manually or place your take profit using high level techniques, which I'm going to show in this video. Okay, so but then you have to use both manual and automated take profit method. The reason because you are actually trading a risky event, because the breakout may not hold, so you have to get out of that trade manually. But if the breakout actually succeeded to hold, you have to make sure your take profit follows a defined techniques, which I'm going to show you in this video. Right now, we are going to the chart to make this thing work. Okay, we are going to chart to make this thing work. So right now, this is a MetaTrader 5, and I'm going to open volatility 75 index. Later we check Forex asset. I'm going to open volatility 75 index. Now you have to spot the trend of the market at higher time frame, not any ordinary time frame. So higher time frame from H4 and above, that is what you're going to use. The higher the time frame of spotting the breakout, like the higher the time frame of the trend, the better the breakout signal. So let's try to use the daily time frame to actually get a very powerful signal of high risk keyword. Okay, we know that in the past the trend characteristics of this market is what? Downwards. So that's the trend characteristics of this market. Most time the trend line may not be perfect, but the slope is always perfect. If market is trending downwards, it has a negative slope. So that negative slope is metaphysical entity, is a metaphysical parameter that actually manipulate the market to even make you lose more money, because you will be tempted to trade against trend, thinking that your trend line is showing you the right map, like your trend line is the right to mapping out the price movement, not knowing that the trend line have a lot of regressional errors, and what matters is the slope value. Once the slope is defined to be negative, no matter how you trade against that downtrend, because negative means downtrend, we are going to have issues. And when the slope is positive, which is uptrend, no matter how you trade against it, you are going to have issue. Okay, and that is when breakout comes in. The market tends to break out in the direction of the trend, so it will break out from a swing, like a high or low, depending on whether uptrend or downtrend, and then try to create new highs and low. Okay, and that's what you should be trading. That's the best trading strategy. the best trading strategy is to follow trend, determine your zero differential, which are support and resistance, and try to enter market, near zero differential, because the market will have a minimum drawdown, because these are critical levels, like the rate of change of price with time is zero near those support and resistance. And then you deploy line frequency analysis to actually know when to exit the market manually and also automatically, because you have to use both. If you have to take trading serious, you don't want to be losing your profit back to loss because you are waiting for market to hit your automated or automatic take profit. No. Right now, I'm going to show you this. The characteristics of the trend is downwards, like the trend is trending downwards, the market is trending downwards, right? Now, you identify your breakable level. A breakable level is a level that is trying to fight the trend direction. So it's a breakable level. Why non-breakable levels are those swing levels that does not interfere with the main direction of the market. Okay, so at this point, if you are still losing money, don't hesitate to subscribe to our VIP channel. It's not that I'm forcing people or traders to actually have access to this. Is because I want to lead you to a state where you can actually become financially free. No matter the quantity, the frequency, the number of videos you watch, that does not mean that you are going to be successful. But when you follow a successful trader or like somebody that have what it takes to succeed in trading, you are going to actually resonate with the same frequency. And right here, you see that we have identified our breakable levels. Now, we don't care whether price is coming near here or not, or how long it will take. What we are going to care most are the zero differential before this breakable level. Zero differentials before these breakable levels. Okay, so right here, since the market is trending downwards, you'll be looking for resistance. But if the market is trending upwards, you'll be looking for support. So here, our point of interest is this level. We hope that one period of time, the market will break out of it. And so right here, you look for where market keep going against the trend and stop and have issue to go and start rotating and then going in the impulse direction. So here is our resistance. So this is a resistance, okay? So we mark this resistance. We wait for price to come and tap into this resistance. So price tap into here, and then what do? You go to some lower time frame for entry, like 30 minutes time frame. So let me change the color of this to blue. Now you go to 30 minutes time frame, and then you localize this blue so that you see what is happening in this market. So you see that immediately price tap here. You go to line chart to see if there are output. Now there is output here. It tap into this zone and create output. You can enter this market on this output and you place your SL, okay, not just above this loop. This is called loop, something that get output, not just above here, but study the market in some other higher time frame and check where there are zero candlestick. You have to be on candlestick domain. It's very important. So you have to use arrow to do this, because arrow will move from left to right. Okay, so here you can see we have zero candlestick here, and then you keep tracking this. They have zero candlestick, meaning that you enter this market here, you put your SL somewhere here. The SL is a kind of big, but it's because you are getting this signal from the daily time frame, and this signal is going to be a swing signal. Is going to work, because I think this breakout you should trade it as a swing trader, because you have to be testing to see if the breakout is going to hold. So now you are risking 7,000 pip and you are targeting first, because this is the breakable level, so your first TP should be on breakable levels. So if you are risking 7,000 pips to get 24,000 pips, that is over 1:3 over 1:3 risk reward. Okay, so when this market come here, your first TP will be hit, okay, and then you go to your the time frame where you get your direction, which is the daily. When you go to daily, now you are going to study the output characteristics of the price movement near the breakable level. So as price is approaching this breakable level, what happens? It break it. Once it break it, that's not the end, it break it. That's the first sign that it's going to be a breakout. Now the next thing to do is you trade your SL in the counter direction, in the counter side of that zone, which is this side, because this is the counter side, because this side is the side, where price cannot, is the side that is against the direction of the trend. So you put your SL here, and then what happens? The market keep creating output, like outputs that are in the direction of the main trend, until it reaches a certain price, and then it change the output sequence and then start creating output to the upper side. Okay, now what do? You close all your trade automatically. But the general rule of thumb is measure the loop before a breakout. So the loop is a distance between a high and a low before that breakout. So it is 25,000 pips. So measure 25,000 pips and put your TP. One of your TPs should be around 25,000 pips, and then multiply this 25,000 pips by 1.5 so that you place your next TP. I know if you multiply 25,000 by 1.5, it's like saying 25,000 plus 12,000 or 12,500, and if you do that, you have around 40,000 or close to 40,000. That's why you should have placed your next TP here. Market is mathematical, right? So that's cool. I may not be opportune to talk about this in different scenario, like uptrend, down. This one I said is downtrend. I may not have that opportunity to say it in uptrend, but let's check a Forex market. Maybe I will use it for uptrend studies. Here, let's consider this market. This is USD, which is a Forex market. Right now, you are going to study the trend characteristics of this market. And so the trend characteristics of this market is uptrend. Why did I say uptrend? You have to know a trend is equals to a state when the market have at least one break of structure. So it break here, so it's trending up. It break up out of this, and so it's trending up. Right now, locate your next breakable level. For uptrend, your breakable levels should be resistances, right? So we locate here, because price reached there and reverse. So one day price will break out of it, right? So when you locate here, then locate a pre-zero differential before it. So this is our pre-zero differential. I'm going to change the color. Okay, yes, you are going to be staging for this breakout on the pre-zero differential. Okay, so let's change the color of this, and then we have this. Okay, now this is our zero differential. This is daily time frame. Now we go to 30 minutes time frame, and then candlestick domain to plan our entry. And then when you come to 30 minutes time frame, you localize our yellow stuff, and then you go back to line chart. You want to see when the market tap into the zone first, and then start creating output. So we have a loop, and this loop creates output. Right now, you localize the zero state in the market where there are probabilities of zero candlestick. That means you have to go back to candlestick domain, and you discover somewhere here there were no candles. There were no candles. So you are entering this market somewhere here, and you put your SL down there. That's around 100 pips, and we step up to some higher time frame like H1, and you discover that first of all, you are targeting this market to tap into this zone. So you don't need to waste your energy. You wanna put your TP on the extreme boundary of this zone, which is the counter boundary, the boundary that is very, very is like that will trigger your take profit, where your take profit is triggerable. Okay, so this is the closest boundary that where if you place take profit here, it's going to hit immediately, and that's what happened, right? So the market came here, so your first TP should be here, and it is hit, right? Now what do you do next? You hold the remaining trade. We are going to go back to the daily time frame and switch over to you switch over to line charts. This time around, why I stick over to daily is because that is where I get the direction. If I use H4 to get direction, then I will always go over to H4 to study this output characteristics or near breakable levels. So this is where we enter the market. So we are now looking for outputs. Okay, so we managed to see output here, and the market break and started going up. But then if you use the traditional method of calculating your TP after breakout, you see that at least one of your TP, because when you measure this to here, we have around 230 pips. So you have to measure from here and then measure up to 1230 pips. Yes, the market did reach there, but it first of all creates an output that is against the trend. So in this case, you have to close the trade here, and then when it re-enter the zero differential zones, what do? You actually monitor the new zero differentials that it is creating, and then re-enter the market and deploy the same idea. You see, you don't need to worry yourself to deploy these strategies, these ideas. These are highly scientific and mathematical based ideas. But you can literally subscribe to our VIP channels and enroll for our courses and mentorship, where these things are continuously broken down in a layman's understanding. I think the best thing is to copy and paste our training right time. In that way, you don't need to stress yourself of this, because I spent years to know this thing, meaning that I can apply them and deploy them as if it is ABCD, or as if it is something so easy because I already know it. But it might take you up to 20 years, several years to actually deploy this thing. Then why not leverage the effort of the successful traders? I'll be ending this video. Make sure you do the needful and make sure you are succeeding in this market. Don't be a loser. Make sure you are achieving things. Make sure you are happy trading. Make sure you're a successful trader, because if you are not a successful trader, you are not supposed to be my subscriber. You are not supposed to have anything to do with me. Thank you. Bye for now.